digital lending is problematic. It actually it started actually with someone going to the central banking hall and basically crying because her husband had committed suicide over a digital loan. What I feel has been a key problem is, as a regulator, the Central Bank of Kenya is a prudential regulator. Their bread and butter, their knowledge is all about bank supervision, where the reason why a central bank supervises a bank is because a bank takes other people's money. It protects the depositors. Now, most of these digital credit providers don't have depositors' money. It's like the owner's money.
Welcome to all our viewers and our listeners to this episode of A Certain Amount of Madness. I am your host, Mamka Anyona. Now, today we'll be talking about debt. I know that everybody has heard so much about debt. We talk about debt everywhere, on the news, in boardrooms, on policy platforms. But something that's very interesting in the conversations that's happening around debt for Africa is that we keep missing where the crisis may be hitting most severely, which is individual debt. For as long as human beings have existed, they have always had methods of lending to one another as a means of improving cooperation, building productive sectors, building markets, and so on and so forth. But until the end of the First World War, most cultural and religious traditions did not accept lending for profit. After the First World War, we started having what we call financialized markets, where lending itself started becoming an industry of its own. In countries such as Kenya, lending has mostly happened at the large scale level, sovereign borrowing, lending for trade. And it's only in the last, we'd say, 2 decades or so that credit has become accessible to the average Kenyan. A lot of that accessibility is a result of development financing that has looked at this as a means of increasing financial inclusion, democratizing credit, and basically just sending money to the last mile, as it were. What that has actually looked like in practice is that where there was very little personal debt by the time of the 2008 recession, and that protected a lot of African countries. As of today, more than 2/3 of households in Kenya are in debt. Individuals are in debt. People without any means of earning money are in debt. This is through all sorts of lending, whether it is through banks that have made credit more available to people, or it is through the burgeoning sector of digital financial instruments. We know them such as M-Shwari, Fuliza, Tala. On the margins of this sort of like lending sector, there's also been a growth of what's happening in the sort of like in the legal gray zone with Shylocks and the debt collectors and the methods that they use. And what we have started seeing in our country is most households are in some sort of financial distress. 9 out of 10 households in Kenya are in financial distress. More than 60% of households are taking out some debt or the other. A lot of households have had to sell assets to be able to service debts. And a lot of young people are completely shut out of the economy because they have debts, most of them not amounting to more than 1,000 Kenya shillings, that have put them in a position where they are holding debt with the Credit Reference Bureau, and that keeps them from accessing very many services in this world. And for that reason, I am joined in studio today by Radha Upadhyaya, who is a development economist and an associate professor at the University of Nairobi's Institute for Development Studies, and by Naomi Barasa, who is the coordinator of Palestine in Kenya. I hope I'm saying it correctly, and who is a feminist and a community organizer par excellence. Welcome to the studio.
Thank you.
So let's start from the beginning with you, Radha. What we're seeing is new. debt has not necessarily presented itself this way in Kenya before. What has changed over the since independence, for example, what has changed to lead to this situation where now everyone can access a loan basically on an app within seconds without any form of collateral? And what led us to this moment in terms of the regulatory infrastructure and the financial infrastructure?
I think it's really important to highlight that I think, like all Kenyans, I too am very proud of the financial inclusion story, which kind of started with the rise of mobile money and M-Pesa in 2007, 2008. But we need to draw a distinction between the payments function of mobile money and the credit function of mobile money. So, um, you know, uh, when a big reason why M-Pesa became so popular is because it actually helped Kenyans do what they were always doing. So the Kenyans were always helping each other in their networks, always supporting each other. And M-Pesa just helped people do that better and faster, and actually also kind of helped kind of both widen networks and increase networks. So when it comes to financialization, there are quite a few debates. There are some researchers who really have heralded M-Pesa as exceptionally transformatory, leading to a lot of growth. And then there are a lot of people, mainly in the financialization camp, who are very negative about the impacts of mobile money. I think the research that I'm kind of most believe, or for me is the most convincing, is where M-Pesa has helped, it's helped people manage risks better. So in the past, if your child was in school, out of school for a month, 2 months, because you didn't have school fees, now there's evidence that they're out for 2 weeks. But that's not necessarily because you found a new source of income. It's you're able to harness your networks faster. So, basically, mobile money helped people manage risks better. Then in 2012, with the rise of digital credit, and actually the hope was, even if you read the then CBK Governor, Professor Juguna Dungu's speech at the launch of M-Shwari, the idea was that this digital credit would help that risk management function be even better. But unfortunately, due to a variety of factors, that has not played out. And if anything, there's now a lot of evidence that there is a high level of over-indebtedness, as you mentioned. I found it quite interesting because, as an academic, you're a bit removed from real life. And often research, just the nature of research means it takes so long that you're a bit disconnected, say, with policy world. But during the inauguration speech, the last inauguration, Dr. Ruto actually mentioned this problem of digital credit and over-indebtedness in his inauguration speech. So for a researcher, I was like, oh my God, this is, I could never imagine that it would be so topical. But as you highlighted even in your introduction, microloans are particularly difficult. So even though there's been a recognition that this is a problem, and there have been some steps in the right direction to try resolve it, for example, the CBK Amendment Act, to try license it. And I think that's how we kind of you got to know about my work, because I've written a paper on the regulation of digital credit. It's not really addressed a lot of the root cause of the problem. Yeah.
Yes, great. Thank you for opening with that sort of background and the separation between M-Pesa's function as a sort of like an intermediary for the payment function versus the credit function, because the credit function is what seems to have introduced an entire new world of personal and household crisis around debt. But a lot of this have roots in development, cooperation, and the idea that countries in the global south, countries that are struggling, to build their economies, would do better if they built mechanisms for taking credit to the last mile, so that people could use that credit to build, to farm, to have small and medium enterprises. Now, Naomi, you have been in the world of development for a while, so you have seen the evolution of credit. You've seen the evolution of financing in development, all the way from when financing was given as grants to when this concept of microcredit and microfinance started permeating, especially through cooperatives and through development lending, most famously the KREP Bank and others. Tell us a little bit about what this looked like, what it has looked like to you, all the way from when NGOs started getting into the business of financing, all the way to where we are today. There's just a myriad of apps through which people can access credit. And what has it done to people and their households?
Thank you for that question, Mamka, and thank you so much for inviting me to this podcast interview. I would like to say that I have witnessed this right from the late 80s to early 90s. And I think at that point is when I guess humanitarian development organizations were, I think, kind of excited about the Bangladesh model. And so are trying to transfer it here. And I remember late 80s and early 90s, we also going through structural adjustment programs. And this is the time that we had started struggling with healthcare that needed to be paid for, education, and housing was also becoming a real stress on families. And at that point, I remember organizations like Action Aid had these programs where they mobilized community groups, mainly women groups. And I'm remembering this mainly because my mother was in one of such. I must say that I grew up in the slum of Korogosho, so we were really a target for such organizations because of their poverty that needed to be eradicated. But my experience is very different from that intent. Maybe the intention was good, but everything about it was very wrong. Number one, I remember because at that point, I had just finished high school and my mother donated me a lot as a secretary for these groups, volunteered me, go and write for that group minutes and stuff. So I would be in many of these groups in the community. And when these monies were introduced to them as microfinance money that was meant to do small enterprises, women were excited about it. Of course, all of us were excited about it, but nobody ever told us or nobody ever took interest in this other ongoing dynamics, like people will now have to be paying for education, people will have to be paying for healthcare. And it's that time that the government was cutting public expenditure, especially in public health and water. And I remember at that point, we really struggled with cholera in our communities. So a lot of this money would go into those other needs. But besides that, the infrastructure or even the thinking of that whole project for me was very, very wrong, because you are given, I don't remember how much they were given, but whatever amount of money, and asked to invest it in business, and no grace period at all. And the following week, you are required to start repayments. I also do not remember the interest rates. They must have been low. But even if the interest rates were low, there's no business that you will start this week, even when it's zero interest, and next week you are repaying. You will obviously draw from that very capital to pay the. And two impacts I saw on the credit, on the microfinance project that time, that all the businesses in all the groups that I was supporting to document for, to secretary for, all died. Some died immediately, others gradually, but ultimately they all died. And you know what our mothers said about that? That this was devil worship money. Of course, that was in their own understanding, their lay women understanding, it can only be devil worship money. Some people say it's Illuminati's money because you put it in your business and it eats up even your own business. So that's how they explained it. But for those of us who understand, then we know what it meant to, So that's impact number one. But impact number two that I saw was both social and psychological. Constantly, I remember my mother would panic constantly. She was always panicking because on Wednesday she must have raised this amount of money. And for my mother, I think she didn't do any business with it because my sister was just joining university. And so this money went to university. So she didn't put in any business. So every Wednesday, she worried so much, especially from Monday, where she would get the money to repay. And that was the story of every other woman in the group. So that was the psychological impact. And they did not have quality life, especially from Monday to Wednesday. Number two, because of the burden it put on the collective group, any defaulter then became the biggest enemy of the group. So it set people against each other. And I remember this particular woman who I still feel so sorry for. The women organized and went and picked everything in her house. She's already poor, so that even if you pick that wooden cupboard, you've taken her all. You've sent her back to negative. At least she was probably at 0 or +1. But now you've taken her to -0 or beyond. So for me, that was very bad. But fast forward, then we have KREP. Again, an experience back in the rural. There's this group of women, they're getting cow loans as the microfinance bit instead of cash, because then they started talking about, financial literacy is what is missing, but if we give them what they are familiar with. So this particular lady got a cow, a grade cow. A grade cow is a high maintenance cow. So, but you're convinced that when it starts producing, it will produce times 3 or 4 what you already have. So she decided to sell all her other cows to maintain this great cow. And you know what? After this money ended, the cow became sick and didn't start producing at the expected period. And so she had no local cows, and the grade cow is not yet producing. And so she just went down. And at one point, because she was not now repaying, and that was a burden of the group went for the cow and they picked it, and she went down with it's called ulcers. To date, she struggles with ulcers, and her understanding of that again is another interesting one. So I think that, and I have many, many examples, because I am always listening to these stories when I'm doing my community work, listening to where there are these ones who've taken others to court, to the chief, to who. So yeah, I think there is need for rethinking a better model. One, a model that allows people to be able to think about a humane repayment period with a proper grace period. Number one. Number two, can people be supported in financial literacy in a better way, a way that is not extractive? But also number three, can there be mitigations for shocks? Because even business, they don't always go as expected. Sometimes there is something, could be global, could be national, could be anything, could be weather and climate. So things to mitigate the shocks.
I can pick on that. I think you really encapsulated, like I often say that if you follow the trajectory, it was microfinance, didn't work that well, then mobile money, which was only payments, not getting the impact we thought it would get, and now back to digital credit. But in digital credit, the lessons of microfinance have not, I think it's not important. Like it's it's definitely important, but it can't resolve everything. For example, one of my students did a really good study on digital credit use by University of Nairobi students. And the basic questions on financial literacy of like, can you calculate interest? These students knew that. Like it's not, they actually scored quite highly on a financial literacy index. And yet they were getting into debt, and getting overburdened with debt. So I think there has to be some sort of like, I don't want to throw financial literacy out with I think it's really important. I personally feel at a young age, my father, who passed away 25 years ago, gave me so many financial literacy skills that when I didn't have him at a young age, I managed. Yes, I'm not saying it's not important, but it's wrong to think that just financial literacy will resolve the problems, because these problems are much more complex than and kind of I think this what you mentioned, like the dignity of the borrowers, like having that sort of understanding of what that means. When someone lends, a lender should be also responsible and should also have some form of literacy where they're not it, that it's not that they share some of the burden of this over indebtedness.
No, I totally agree with you, because I know this lady who has finally had to relocate to the US as an illegal immigrant. She had some piece of land which she had leased, bought a generator and a pump because she wanted to do horticulture farming. But because she badly needed some money, she went to borrow money from a Shylock. And the money she borrowed was only 10,000. But by the time she is leaving for the US, because she needed to give collateral, and the collateral then became the generator and the pump, worth 250,000. By the time she was leaving for the US, the loan had grown to the amount of the generator and the pump. So she was not going to do the farming anymore, because the Shylock had now, recovered their money from this. And I totally agree with you. And thank you for sharing your research, because for me it's mind blowing. Just looking at figures like 42% on interest, on loan interest, for me is just immoral.
Yeah.
It's immoral.
So let's talk about that, because you did say that there are two sides of the argument when it comes to this discussion about microcredit. There are those who are opposed to financialization. There are those who see the sort of function it can serve in a context such as ours. But on the research you have written, amongst our friends and family, the majority of people who take out loans take to meet needs, just like you said. And it is in the absence of a government that provides for healthcare, that provides for education, that provides for security, that provides financial protection in cases of emergency, that we end up financializing emergencies. And you also said something about this sharing of risk between the debtor and the lender. But the lender is probably acting in their own interest in an asymmetrical way, because they do have more power in that context. So they're working exactly as they wish to. So let's talk a little bit about rates. How do these interest rates work, and what is no ability to cap interest rates, such that from your research, digital credit lenders are accruing like 400% in interest, which should be, that is, it should be illegal, as Naomi has said. It should be illegal to be able to make that much money from someone who possibly took out that debt to pay for a sick mother in hospital, took out that debt to settle, school fees or something. It's illegal for that to happen. So it's a sort of two-part question. One part being, what are the failures of of the of the structures that make up this state that have led to this, like, burgeoning of private debt. And secondly, who benefits from it? Because that is usually obscured. Who owns these apps? Who owns, who finally benefits from that interest that is being drawn on these loans?
5 digital credit providers. Yeah. And there are 800 applicants left. Yeah. So this is what my paper tries to highlight, that actually, even though the aim is good, this licensing regime is kind of so based on like a supervisory model where the central bank's even trying to maybe like understand the directors of these digital credit providers, that you have all these providers. Every time the central bank says, we have licensed 25 more, but the number of applicants goes up. So we really need to kind of put more resources behind the central bank. It's basically gone. I actually have sympathy for the central bank. There's other research in the past that I've done on things like Basel capital regulations, which show that actually the central bank is a very kind of competent regulator. But in this case, it just doesn't have, like, you go from regulating 42 banks to regulating 800 digital credit providers. It just doesn't have the resources. The second is the hat they play. So it's very focused on licensing, whereas actually what needs the whole hat has to change to consumer protection. I'm not saying that things like this usurious interest rates will completely go down with the focus on consumer protection, but like within our main banking act, we have a law like called the Induplum rule, which says that your interest should never be more than the loan you borrowed. So if you borrow 10,000, your interest should never go more than 10,000. But for digital credit providers, even though that kind of rule is there, this Induplum rule, because the figures are generally quite small, it's not clear that they are followed. Yeah. So, and then the third is something that I feel quite strongly about, and is what the paper is in Kenyan's mind, partly because, when this regulation process was started, the focus was really a lot on this data breaches. Yeah, like people were applying for these loans and not relying on their family because it provided some level of anonymity. And then all of a sudden, your whole family, everyone is being messaged saying, this person owes money and you have to pay on their behalf. Now, because a lot of these data breaches were being done by the kind of smaller lenders, the focus on the main lenders in the market, because they were considered already regulated, has just disappeared. Yeah. So of these 800 applicants, the 3 main providers are Fuliza, which is a partnership between Safaricom and NCBA and KCB, M-Shwari, which is a partnership between Safaricom and NCBA, and KCB Money, which is a partnership between Safaricom and KCB. Yeah. There was no new regulation to them because they were considered already regulated under the CBK Act and the Payment Service Provider Act. And to give you an idea, Fuliza in 2025 lent 1.24 trillion shillings. Wow. And these 195 who are licensed lent 109 billion. Okay, so I feel, whilst I'm not saying we shouldn't license these kind of smaller digital credit providers, we need to have a serious conversation about these bank-fintech partnerships, bank-Safaricom partnerships, which are doing more than 90% of the lending. And yet the CBK is just like going crazy, trying to constantly, license these smaller digital credit providers.
So let's talk about Safaricom.
In particular is I feel like when M-Shwari started, one of the key articles which lauded it said, the good thing is people get to decide whether they pay or not. Yeah, like if you borrowed an M-Shwari loan, you decide. Now, the fact that Fuliza sweeps your account as soon as you get some money in means that there are many people, I'm sure you've had that where, like, I hardly use cash now, but if I want to give a tip to someone, I'll be like, oh, they're like, oh, I don't have a line, send it to my mother, send it here. Our financial inclusion is actually going back down because people are now kind of trying to hedge the game. They have a Fuliza loan, they can't pay it back. They're getting money into a friend's account. That is actually now again kind of clogging up the system. So this idea that you have, whether you call it an overdraft, whether you call it a loan, whether you call it like whatever you call it, the legal language, I think, is obscuring the fact that it's borrowing. Yes. Yeah. And the idea is that when you borrow, there should be some mechanism that you decide when to pay it back.
Yeah, yeah. So let's talk specifically about Safaricom and its lending practices, that it has become in itself a sort of financial institution beyond just being it is a fintech, though often presents itself not as one. So the numbers you've given us, they're really quite staggering, that the majority of debt transactions happen through one of their many apps. But they also have, like you're saying, they also have some practices that are very counter to the protection of consumers. For example, as you're saying, with Fuliza, the fact that it automatically clears your balances to sort of pull its money back. The fees that are charged for transactions, the interest rates. Talk a little bit about what's happening there. I know that some of these questions have been taken to court with regard to the interest rates and so on. Tell us a little bit about how Safaricom is being managed, and what else may need to happen to make this to protect consumers, basically.
I mean, I think it's important to understand that Safaricom is a fintech, but it operates with banks. And one of the things I show in my paper is actually the structural power of banks and fintechs in Kenya is so high that honestly, when this act was happening, there was no lobbying by Safaricom to say, don't include us. Yeah, but structural power is this idea that government officials need to play this sort of balancing act when they're trying to regulate, because certain private sector institutions provide both a lot of taxes and a lot of jobs. Yeah. So when you have one organization that pays 10% of total taxes to government, it doesn't need to like go lobby or pay bribes or do anything illegal as such, overtly illegal. Yeah. Also, I found it also very interesting that when Ruto came to power, after that inauguration speech, one of the first things that happened is Fuliza reduced its charges. But that was like a one-off, like political, like I think they judged the political mood and realized that we need to. The studies that have shown where, I also think it's really important to remember that Kenyans want credit. Yeah, they don't there's a high demand, a lot because of the things you raised about the lack of, suitable health education, like funding going down in those areas. I personally feel we're actually in structural adjustment again, though not really necessarily enforced by the World Bank, but like our own debt and. But the studies at a micro level that show that where credit is beneficial is when there's a thought out plan for it, there's a bit of delay between when the person applies for a loan and is granted it. Now, with Fuliza, it's like if you don't have money to pay, you're automatically offered a loan. Now, that is partly why people love it, partly why but some of these frictions which I don't think would be hard to introduce technologically, need to be introduced again. Yeah. And other things, like partly because Fuliza is able to draw from your payments. To the best of my knowledge, Fuliza does not submit data to the Credit Registry Bureau. Now, there's a whole lot of problems around the Credit Registry Bureau, but the idea that this Fuliza, because it's almost like they don't need the data from the Credit Registry Bureau, they have your own data of your own Safaricom transactions. There's a big push both from Treasury and Central Bank to open finance and open the rails. And I think that can help, but I think we're quite a long way away from that. But even really simple things like you should not be allowed to borrow to bet. Like gambling is such a big problem amongst the youth in Kenya, and not just the youth. I'm sure if we banned it, they would lead to other problems. So I'm not suggesting that, but surely you should not be allowed to borrow to bet. And technologically, I don't think it would be difficult to fix that. Yeah. So between this sort of induplum rule and this not allowing borrowing for betting, kind of people having a choice of whether to pay back their Fuliza loan, I think would be the three sort of immediate kind of short-term measures which don't resolve this bigger thing that people are borrowing because the economy is difficult, but those can make it a bit more humane.
Yeah.
Because I don't think banning anything is actually the
works.
solution. Yeah.
Indeed. Naomi, you talked a little bit about the sort of the emotional, psychological, and even social impact of debt. So David Graeber's book, Debt, is one of my favorite books, and I'm really sad he died of COVID, or at least I believe he died of COVID. But his book, sort of starts off by giving the history of debt and associating debt as it is in many linguistic traditions, many cultural traditions, many religious traditions with sin. That debt is a sort of a burden you bear towards people. Even though in Christian tradition, the concept of Jesus dying on a cross to pay off the debt being sin. So there's this deep moral connotation embedded in the concept of debt. And so it makes those who find themselves indebted and unable to pay, it creates a sort of psychological and emotional crisis at an individual level. And it's completely, at least to my mind, individualizes a very collective problem. And so you have people and households that are living in shame. And because they're living in shame, they are unable to talk to one another. They're unable to organize together. They're unable to even find ways of solving both the immediate problem and the structural problems that they are facing. And to my mind, debt has created a lot more sort of social fragmentation than before. When I finished university and I started doing my internship, I could not even get a loan to buy a car. And I had an internship with a salary every month. I could not get a loan to buy a car. But right now, people with no collateral are getting loans to buy Ubers. They're getting loans to buy Spiro bikes. And the loans are they find themselves caught up in this never-ending loop of paying interest and paying interest multiple times the original, cost of the asset, find themselves in distress and then try to restructure the loan, end up in even more debt. Tell us a little bit about your experience as a community organizer and how people are experiencing debt and how debt is acting as a very sort of potent tool to keep people from organizing.
Thank you for that question. I'm thinking of a number of things. For young people, for example, hustler fund, they borrow knowing very well they're not going to pay it, number one. But number two, borrowing because the pressures are too much. So I'm borrowing because I'm going to drink. So you're borrowing not because it will enable you clear some financial burden or debt somewhere, because it's too little to do that. So it's only enough to enable you at that moment forget about that. Number one, it puts you in that desire to always be intoxicated for you to forget about it, which is not healthy. But number two, the harm it puts, the emotional and social harm it puts the family at is you become the center of attention for not being able to pay loans and for not being able to meet your financial obligations. But also, to some extent, there are people who come and auction property. So it was a small loan, maybe that was taken to do something small, but it's really grown to the extent now they're coming to recover from family property, family asset. So that by itself is really, really, really problematic in the sense that, number one, it stigmatizes a family as that family that is always borrowing and never paying. But also, it gets worse when you borrowed within a collective, because then everyone else is responsible for your debt. And therefore, the pressure you get from everyone else. So rather than being at your best for organizing, then you are either always running away from others, therefore then not tapping on the collective for organizing, or braving them, but also making enemies from the same. Either way, and I remember the situation of our mothers then. At that point, I feel like Kenya should have been organizing against the World Bank conditionalities on us, on structural adjustment programs. But you are too busy thinking about it's Monday, it's Sunday evening, and Wednesday, I must, you know? So that by itself, number one, removes you away from pulling each other to collectively either check the state or organize the community to question all this, to individually worrying about this money, but also worrying about image. That by itself takes you away, takes your energy away, and even makes you not even think about organizing as a priority. And for me, I feel like while it might not have been intended, sometimes I think maybe it was, because at this point they are bringing, why didn't they just put all those monies for microfinance and credit and whatever to public expenditure, so that we're not paying these things, rather than introduce, we're calling them cost sharing. So we cost share, then they bring us that money. And as we cost share, that money is even making you even a more unhealthy person. By the way, Radha, while the initial money was not intended at making interest, creating an interest, but I think the way it was modeled by organization is creating, I think they thought of a cooperative and therefore building the capital base for others, so that what I pay in terms of interest, it was small, I don't remember how much, so that what I pay in terms of interest would then be able to create another pool of cash for another group. And that's how it, yeah.
No, but the popularity and the transfer from being more donor-led to a private sector-led meant that then the interest rates just, like shot through the roof. Yeah,
Yes,
even
yes,
for
yes.
microcredit. Yeah, and the group lending was a way where you, as you're saying, you use, like always, a financial provider has some sort of information asymmetry at the borrower, but rather than finding ways to resolve that information asymmetry, you make the group responsible. Now, the hope of digital credit was that information asymmetry is bridged with the data that, your kind of calls data, your M-Pesa data, but it hasn't, so it was almost this assumption that because that transaction cost will go down, like microfinance had all these like loan officers, and so that's why the transaction cost was so high. This is all digital, so the transaction cost will be low. It's not led to that. Yeah, that like just because it's an algorithmic based lending, the transaction cost has not gone down.
And what I'm seeing currently, especially with young people, There's one particular young man who is very enterprising, but also has a lot of skills that you would want to rely on him as a service provider, but you never find him on the previous number because all the time he has a new line. And I asked, why do you always have lines, different lines that people can't get you on what number they know? And he's like, do you know I have Fuliza? I don't know, I have what else? And the other day, Safaricom shut down my number.
Yeah.
The other day, they blocked my number. The other day, because even the phone is a borrowed phone, the mdogo ones, the one that you take on loan and pay gradually. The other day, the phone was even blocked. He can't use that phone. So he can't use the line. And then he puts another line on that phone, and now even the phone has been blocked. So this person is constantly, and it becomes a vicious cycle. So you're running away from Safaricom, you're running away from this other person, but also in the process, we cannot access you. And yet you have the skills that we need. So every time he has a new phone, a new line. And yeah. So
Stay with that point a little and talk about, because one of the things that I think shocked me, when I was researching this, is how being listed in the credit registry mean that you don't to and then cannot break out of that. Have you seen this amongst young people?
yes, and the other day, I don't know if they have removed it, but the other day there was this conversation of even enlisting defaulters to the marriage registry, so that when you go for marriage registration, you are denied because you are CRB'd. It's such a weird thing. So it's a vicious cycle. You took this to get out of poverty, and it's made you more poor because you can't access even, let's even say, even meaningful loans to do something meaningful. You can't get a job because you're CRB. And now I think it's even a problem to now financials themselves. Now they're calling people, banks, calling you and saying, we can help you even if you are on CRB, because it's become a national problem. It's a crisis now.
So if I can add to that, a credit registry bureau is actually absolutely essential for the functioning of a financial system. So again, I don't think we need to throw the baby out with the bathwater. There were two problems, and that, I mean, the main thing that President Ruto mentioned in his inauguration was this issue of the CRB. When people started using this digital credit loans, they didn't realize they were going to be blacklisted for loans as low as 1,000 shillings. Yeah. The problem has happened that now, for the last few years, there's been a rule that you're not allowed to list someone in the CRB for loans for a default of less than 1,000. So what happens? There's another way for a finance provider to realize. They'll just see that, oh, there's actually no data. Yeah. That means that they defaulted. So we can't just do these quick fixes that just say, oh, no one's allowed to submit data. Yeah. Another key challenge is our rules say that you must submit positive and negative data, whereas the financial providers only submit negative data mostly. There's some positive data that banks are now submitting, but it's very much at kind of the bigger level loans. Fuliza does not submit data to the CRB, whereas it had, the theory was that when you have a digital footprint, if you're a good borrower, you have your own kind of credit history that you can access and then go to different borrowers showing, look, I'm a good borrower. Yeah. But that has not happened in practice because a lot of the data is not your data. It's like M-Pesa data, which seems to be like Safaricom data. Yeah. Whereas you should be able to access your own mobile data. And there have been initiatives. The reason why you had banks calling is the central bank had put in a framework called the Credit Repair Framework, where they required banks to call these small digital loans, forgive half, remove people from the credit registry bureau. But the impetus of that has just not been that strong because people keep borrowing. Yeah. And that's partly why, like Fuliza keeps growing exponentially. Yeah. So a CRB, a CRB is as good as the data that goes into it. Yeah. To have a functioning credit system, you should be able to say that this is my credit history. Let me borrow. But if you have a system where different players decide when they will or when they will not submit data to the CRB, obviously it's dysfunctional. Yeah. So at the moment, since the previous election, it's just been a stopgap. Like, just stop putting data. Yeah. But any financial provider then accesses and says, oh, Radha has got no data for the last 4 years. That means she defaulted, like, even though it's not marked as defaulted. Yeah. So we can't have these stopgap measures, and we can't also just throw out the baby with the bathwater and say, okay, we don't need a CRB. Yeah.
This is interesting to hear because I have had, and it could be my case as well, where I was CRB'd and I cleared the loan like a year ago, and I'm still on CRB. I've not been cleared.
Yeah.
Because
So
they're not submitting the positive data.
now
So
I
then you're not-
understand.
Yeah.
So then nobody really has a proper credit history as you would have. So then in that case, the CRB becomes just a mechanism for these fintech companies to punish
Yeah.
the
But
defaulters.
also, like, it's a credit system. Why are we as Kenyans deciding that we need a CRB to give someone a job? We need a CRB clearance to give someone, get someone married? Like, it's almost like because we can't judge people in other ways, we're using this metric for everything.
For punishment. But it's really interesting because just last week, there's a judge, a Justice Nyakundi in the High Courts of Eldoret, who ruled against the imprisonment of someone for a small debt. And he said we cannot criminalize poverty. And do we see ourselves going to a place where we reintroduce debtors' prisons, we introduce debt peonage, where people have to, do all sorts of things? I mean, in essence, what you're describing, Naomi, in the way that people live, it is debt peonage. They basically wake up every day, breathe air, and eat food so that they can produce money so that they can pay off debt. So even though it's not like the formalized systems of debt peonage that we've seen elsewhere in the world, for example, when we send young people to Saudi Arabia, usually there'll be some sort of transaction fee to get them there, and they will be forced to work for certain periods of time to quote unquote pay off that debt. So those are sort of like paralegal, if I should call them that, or illegal forms of debt peonage. But in essence, the majority of Kenyans are living in debt peonage. The people who cannot leave jobs that are sucking their souls because they have debts that they must pay. But the other thing, especially reflecting on that judgment coming from Eldoret, are we seeing ourselves going to a place where, like, the carceral system is going to be used to punish, people who are unable to pay their debts?
I think in extrajudicial ways, people are already being very punished. The fact that, number one, you can't access a job, the fact that, number two, people can come and just recover your assets, not even in a very, very legalized way. Sometimes, there's no even court order to come and recover from you. They come and pick everything. There's no asset valuation to know that what they're picking. Sometimes they come and clear the room. So for me, I think that's already punishing the people. But I also think, to the extent that, and once again, thank you for the research, because I've really picked quite a bit from it, and on the issue of especially structural powers of these fintechs and other institutions like Safaricom. I remember one time before Joseph,
Yes.
not the other one,
Bob
Collymore died. There were a couple of laws and policies that were to be assented to law. And someone said because they were still going through them, the process slowed down. And I was like, but Bob Collymore is not a member of parliament. Why is he going through laws for them to be assented? Now this makes me understand. So in a situation where we are going through that kind of power, of course, they will safeguard their interest. And I am not surprised, I will not be surprised if Justice Nyakundi's ruling is overruled at one point because of this interest being threatened. So I wouldn't say that it is too difficult or it's impossible that we will not get to a point where we will be going to prison and serving prison terms for, petty deaths like those ones.
I can
I
just add,
don't
I
have
feel people are
confidence.
suffering if the FinAccess data shows, like, not paying a loan is not necessarily a bad sign. Yes, so people don't pay loans is not necessarily a measure of over indebtedness. And especially in the early days, people were just trying, figuring out whether this works for them. But if someone is giving up a meal to pay a loan, and that we have the data that shows that, then like that is a sign of over indebtedness in our economy at an individual level.
Yeah. And it is over indebtedness we expect will continue to grow because as we go through, especially the backlash of what's happening in the Middle East, worldwide, the cost of living is expected to rise. And that means that more people are going to be in financial crisis, needing some sort of short-term solutions, and more people are going to be in debt. So before we close, I'd like to hear from both of you some, not just like a positive outlook to this, because I don't see a positive outlook, but there must be something we're organizing towards. And what would that be? Let's start with you, Naomi. What is it that we should be organizing towards when we're thinking about this growing crisis of personal debt?
I'm not so sure at this point, but I'm thinking, let me just share my personal experience first before I answer your question. There's this time I had an emergency. My son was very ill. He needed to be admitted to the ICU. Initially, as I was taking him to hospital, I knew I needed 100,000 deposit for them to admit him. But when we got to hospital, they said, this is an ICU case. You must deposit 300,000. I didn't have that 300,000. We had gone there at 6 a.m. We did not get admitted until 8 p.m. in the evening. All this time, he was at the reception, at the emergency. And at one point, the doctors insisted that I take him elsewhere because it was clear I was not going to afford the admission. And I refused. At one point, they said, Kenyatta will be very cheap for you. So with your 100,000, you will cover everything. And I just told them, you know what? You are giving me a guarantee for my son to die. So what we do, let him die at your reception. Then I'll come and pick the body and take it to Kenyatta mortuary. And I left. I left my son there the entire day. He was too ill for them to be admitted to the ward because that the 100,000 would have admitted him to the ward. But he was too ill for the ward. But they didn't care that the reception, the emergency reception might have been worse than a ward. So he stayed there from 6 a.m. to 8 p.m. Ultimately, in my worries, and then I'm running up and about trying to get money. And just before that, he had been scheduled for an emergency, for a surgery. And I was getting some 700 from somewhere to process the surgery. So by end of the day, I had to get money from a Shylock. Got 200 to be able to get him admitted, and then he was admitted to the ICU, and then the treatment, By the time I get the 700 that I was waiting for the surgery, it was only enough to top up a bit of what my son consumed and repay the Shylock. So 700 gone, no surgery. To date, I have not done the surgery. So that is how these loans can affect you, even at a personal level. But at that point, it is the best option that you have. Yeah, even when I am quite knowledgeable that for me this is just satanic, you know, it's very bad, but that is the option you have. And I think that is, and just as you said, literacy is there.
Yeah.
But practical options, are they there? No. So this is the only option. So that was my story. But I think one of the things that we need to do as the Wanjikos of this country is to understand the right to life and what entails the right to life. Because for me, all these things and how we are living really is not what the Constitution envisages in the right to life. And so organize around that, using even the whole issue of financialization and issues of credit, but also engage our members of parliament to make sure that even how they look at credit and the whole financialization system is a manner that humanizes us, is a manner that dignifies our lives, and even pegging it to the right to life and pegging it to the right to health and highest attainable standards of life. Because if I am always running away, if I am over drinking to forget death, if I'm, I'm skipping a meal to pay up a loan, then that's not highest attainable standards of health. So I think we need to organize around that. And I know there's the tax justice network. I don't know if this is an issue they pick. You might need to maybe talk to the tax justice network and see if this is something, because a lot of times we look at the other loans to countries and forget about the domestic credits, which will kill us before we receive the other loans that the country is receiving.
Yeah. Thank you for that. Radha, I want you to give your closing, but in response to a question. So in the United States, there's a lady called Astra Taylor. I don't know if you've heard of her. She started the, what may be, but I'm not entirely sure, but at least I'm sure it's the United States Fast Debtors Collective. So it is a union of people who owe money. And I think it was built from the crisis of student debt that Americans are facing. I know help used to be a very helpful tool when I was going to university, however long ago, but today it's becoming one of the ways young people are becoming indebted before they even enter the job market. And so that problem, it mirrors very much what has been happening in the United States for the last 3 decades or so, where student debt has been rising at a level that is not matched by the rise in incomes. And so a lot of people find themselves with debt that is just accumulating and accumulating in sort of a not very well regulated system. And so Astra Taylor formed the Fast Debtors Collective so that there could be some sort of collective approach to fighting for better terms of personal debt. But more than that, it is to fight for those fundamental rights that Naomi is speaking about, that are fundamental to attaining the quality of life that we deserve as Kenyans. That means that we do not have to go into debt. Nobody should ever have to go into debt to pay for healthcare. Nobody should ever have to go into debt to pay for education, to pay for putting food on their table. That is not what I think debt was envisaged for. And I do think in my mind, there is some sort of wisdom of the ages that meant that the majority of cultural and religious traditions would not allow lending for profit making, because there's something inherently disastrous about that, which is what I think we've been talking about today. So as you respond to the question about how what we should be organizing towards, do you think that there's any hope in considering something like a debtors collective in Kenya?
So I think if I can turn the question, and I think what we've come to understand that this is not an individual problem, this is a structural problem. So I think my suggestions would not necessarily be a debtors collective as like individuals coming together. I do feel, I'd said them earlier, but I do feel this kind of sharing of burden. So I do feel there has to be more onus on the suppliers of credit. So, the how easy it is to get a loan, that needs to be slowed down. Yeah, there has to be some sort of answers that you have to apply for a loan. On the other side, the sweeping of your account there are many examples, like you said, of this, of people now continuously changing their phone number, and considering how much your phone is linked to, everything. Actually, losing your number is a big cost. Like, if you don't have your number, it's what you've registered at a hospital with. It's like all the, so many things. So this. I strongly feel the Central Bank of Kenya, we have this regulation. It's obvious that they're not resourced enough. And something like this cannot fall under the purview of just the supervision department. There needs to be a consumer protection department. The Competition Authority of Kenya has done some really good, which I quote in my paper, really interesting suggestions of how some of these debt issues can be resolved. But some of those were not taken into the CBK Amendment Act. So currently, I feel the body that's actually doing the most to kind of protect some of these digital credit providers is the Data Protection Authority. But there needs to be some sort of collective effort from the CBK, Competition Authority of Kenya, and Data Protection Authority, including more resources to them. Yeah. We actually do have a Tatua Center. We do have, like in the UK, a lot of, it's not always, I don't know the US that well, but in the UK, I even have friends who are bankers who work on the side as helping people who got into debt remend their lives. And there have been some stories of, like, I don't think financial literacy is the answer all, but some tweaks and balances, and people have been able to move on. But I feel we just can't pay lip service and say things like remove people who are in the CRB. Like, we need a concerted effort to know that this is a problem affecting all of us. We have the regulation in place, and we have actually, quite good regulatory authorities, whether it's, as I said, the CBK or the Data Protection Office or the Competition Authority, and actually give them the resources and this idea that we prioritize consumer welfare as much as we prioritize kind of supervision or who the directors are of these digital credit. Like, but the humaneness make the humanity and dignity as a core principle of how we are going to do consumer protection, I think is really important.
I think that is a very great note on which to end, that ultimately all of this is about, to the extent that the structures we live in are the ones that we do today, then consumers should be protected to the greatest extent possible. And hopefully debt will not become what, decimates our economy in the coming years. Thank you so much, Naomi, and thank you so much, Radha, for your time. This was such an interesting conversation. There's so many questions I wanted to ask that we didn't even get into, but it was really quite a wonderful conversation to have. And welcome back on the podcast any day, anytime.
Thank you for having us here.
Thank you for having us.
And we're going to put the links to Radha's papers in the show notes. So for anyone who is watching or who is listening and would like to read some of this research for yourself, we will make sure that you can access it. Thank you so much, and until next time, goodbye.